once again from ShortMeTina.com with my nightly recap. As usual, we start off with the overall markets, the S&P 500. So really, since bottoming back in December, right, we went as low as 233.76. The SPY is up over 10% since then, right? Almost up in a huge straight line. We did get like a few days of consolidation in like mid-January, but from that point on, it seems like it's no stopping of the SPY. So we closed here at 271.96, and if you remember from previous videos, for me, I really wanted the SPY to pull back to that 260 pivot and base before continuing its next leg up, right? So because for me, if it did that, it would show some level of stabilization if we can consolidate around the pivot. The fact that the market bounced really hard from this December lows haven't had, in my opinion, any meaningful sort of sideways trading action. Again, it did trade sideways a few days in January, but it didn't have any meaningful sort of consolidation for me. It makes me worrisome that once we hit that 280 resistance, and it's more than likely it's looking like it's going to do that sooner than later because we have not pulled back yet to the 260 pivot, considering all of that, once we retest that 280, it seems fairly certain that we're going to take that trip back down to 260 versus kind of like overshooting and going on to all-time highs. So let me recap that. With the SPY, again, we bounced hard off of December lows, consolidated a few days back in January, but outside of that, it's just been like this one long trajectory towards the upside. We closed at 271.96, and for me, for the rally to be sustainable, we should pull back to that 260 pivot base around there, right? Meaning trade sideways around this pivot point of 260 before continuing on. If we can do that, then we can overshoot 280, go on to achieve all-time highs. If we continue to trend up in the fashion that we're doing now, I feel once we hit 280, it might be a hard fall back to the downside. But as with anything, time will tell. What else do we have? Similar concept, similar story with the IWM. Bounce off of December lows, and the IWM actually went a little bit lower, right? We went as low as 125.84. We've rallied something like, do the math, I think it's like 18%. We've rallied 18% since December. No longer than a month, we rallied 18%. So again, with the IWM, I want the same thing that I stated with the SPY, except for the IWM. Its pivot comes in at around 145 here. If we can just base around here a little bit longer, then again, I'd be more trustworthy of the continued move up. But if we continue trending up in such a sort of, a straight line, such a fast fashion, then I think the crash, when it happens, is just going to be a lot swifter and more painful, for lack of a better word. So, nice update. We closed at 150.96, but again, really exercising caution here, up about 1%. But I do want the stock to pull, not the stock, the ETF, the market, let's say. I do want the market to pull back, although we have been buying it in increments all the way down, including December lows, because again, it's good to buy fear. That's one thing that I am a proponent of. After trading for about 15 years, you don't get as afraid as you did when you started trading. But anyway, that's another story. So sitting here at 150.96, again, would be wise for the stock. I don't know why I keep calling it a stock, but you get the picture. Would be wise for this ETF IWM to pull back around that 145 pivot. So I'm just going to monitor and to see if it does that. Again, exercising cautious. We've shot up so quickly in such a short period of time. What else do we have? ACB daily chart. So I've been doing a video frequently on ACB since we can say back in late December, when the stock was trading around the high fours, and I indicated, considering that the stock was sitting on resistance, it would be a good area to go long. And I didn't get into this trade. It wasn't a trade idea for my premium members because I think we missed the entry by a couple of points. Retrospect can be, shoulda, woulda, coulda. At any rate, almost sitting here at 804, the stock has almost doubled in such a short period of time. Similar with other sort of cannabis and marijuana stocks, it has enjoyed a very prosperous January, a very prosperous December, on huge volume too, right? We're up about 8% on huge volume. These kinds of stocks can go really quickly, really fastly. So, or it can go, I'm not even going to go there again. I think I messed this up the last time, so I'm just going to leave it at that. So definitely on watch for another huge move, right? So pay attention to around that mid 8 levels. We try to test that resistance here of, you can say 8.15 today, right? We went as high as actually we didn't even test it. Yeah, we did. We went as high as 8.34. Pulled back to 804. If we can definitely retest those highs of today around 834, then I think we have a fair shot at reaching $12 to $13. But I wouldn't jump in here again. I'd wait for a safer entry. So put ticker ACB on your watch list. And as I've stated before, anything above that $4, $5 level, I am bullish. What else do we have? CRON, another huge day again with the cannabis sector. Very, very, very dominant January, very dominant December. Stock is up over 100% since hitting a low in December of around 956. So if you went long, perfect. We, on the other hand, we fared very well. We took the trade back in August around that 550 level. Now, I'm not sure if everyone held. If they did, great. They're sitting on huge gains, right? Over 300% in gains, which is amazing. So we closed at 23.25, again, up about 11% on the day. I have been revising my target because the stock has been acting extremely bullish. So if we go back here, you know, my initial target, for example, was around 20 to 22. Then when I saw how bullish the stock was acting, I changed that to around 25. So today we actually hit 25. We went as high as 25.10. Again, pulled back to 23.25. Now, granted, it can possibly go to 30 tomorrow, but that's about what, 5 to 6 points of upside here. But then the downside is huge, right? You're looking at probably 10 points of downside if the stock crashes. Is it worth it to jump in to get that extra 5 or 6 points? For me, I'm not sure it's worth it. For you, it might be. So there's a possibility we might kind of tether or hit 30 if this bull run continues. But I am exercising caution here once again because it's up about over 100% in the span of a month. So again, exercising caution. What else do we have? Ticker AKER. You know, so we're sitting here at 113, up about 2% on the day. You know, if you buy support, which comes in at around, let's say $1, you can potentially get that bounce to around 150. But a break below $1, considering we're trading essentially around 1-year lows, if we break that $1 mark, I can see this revisiting December lows of around 50 cents. What else do we have? Ticker OPTT, up about 2% on the day, closed at 31 cents, right? We closed at 31 cents. So the low for OPTT is around 28 cents. If you're looking for a bounce, I'd wait for the stock to come down a little bit more to that support level of 28 cents. By there, you can get a bounce around 41 cents, right? An upside of around 15 to 20 cents. I don't particularly like trading penny stocks, so I would be cautious. And especially if you look at volume here, there's virtually no volume. But if you're looking for a trade on the long side, waiting until it gets to support wouldn't be a bad idea. What else do we have? Ticker NBEV, daily chart. All right, we closed at 726. Looking at the candle here, we had a bit of a sell-off. So I would be cautious here. It looks like, you know, we might have it looks like it might actually sell off definitely tomorrow. Well, I wouldn't say definitely, but it looks like a sell-off is underway for this week. So I'd exercise caution here with ticker NBEV. What else do we have? All right, ticker WFT up about 17% on the day. Huge move with confirming volume. Closed at 90 cents. We remain above that breakout point of around, we can say 60 cents. As long as it can stay above 60 cents, I am bullish. Sitting here at 90 cents, I can see it topping out at around, let's say, anywhere from $1.15 to, let's give it a range, $1.30. So you're still looking at some upside here, in my opinion, if it can stay above that 60 cents level. If it crashes below 60, then I think it'll definitely revisit the most recent lows of around 27, 28 cents. What else do we have? Ticker MNGA, daily chart dating back to August of 2018. Let's focus in here. So we're down about 2% on the day, closed at 293. So So again, we're running into support. Granted, the stock is trading more or less at all-time lows sitting here, I believe. So with that, you have to exercise caution. We spent the last 3 days selling off, but considering it's approaching support of around, we can say 250, 260, if it gets there, buying, it wouldn't be necessarily a bad idea, because I think you potentially can get that bounce. So if you're looking for a trade on the long side, I'd wait for it to come down a bit more. Based on today's candle, I think it might fall a little bit more tomorrow. I'd go long if it gets close to around 250, 260 for that slight bounce. I wouldn't hold it long term, because again, the overall trend is down. So I'm expecting at some point for it to crash below 260 and sustain that crash. What else do we have? Ticker SGYP daily chart. So we're off about 15% on the day, closed at around 27 cents. And again, I've done tons of videos on ticker SGYP, and I did indicate the chart looks bullish, right? But you can't just look at that. There's other things you can look at. And I've been saying for quite some time that despite the chart looking quote unquote bullish, I didn't trust the move. It looked like a pump and dump. The fact that it sold off about 15% today says, well, I don't know if it was a pump and dump, but definitely there's a dump today, right? So I would stay away, like I've said before. I would stay away from ticker SGYP. What else do we have? So let's round it out with ticker RAD daily chart. So we're up about 2% on the day, and I haven't done a video on ticker RAD for a few days, but I started doing a video on this particular security, Rite Aid. I want to say early January, when the stock was trading around 70 cents, and I indicated we can very much so see $1. This is why I love trading support and resistance levels. We definitely hit that dollar mark late January. And typical of, you know, how stocks act once they reach resistance, we've had this sell off for the past few days. So looking at the chart, it's looking like Rite Aid can revisit that 60 cents level. So although we're up a little bit on the day, I wouldn't be surprised if it falls back to these December lows of around 60 cents. So at this point, I wouldn't, I'm not interested in buying Rite Aid at all. So we're going to cap it there. ShortMeTina once again from ShortMeTina.com. If you enjoyed any portion of this video, I want you to do two things for me. One, head on over to my YouTube page at ShortMeTina, hit that subscribe button, turn on notifications. I do videos every single day. This ensures that you do not miss any. Then head on over to ShortMeTina.com, sign up, become a member. Thank you for listening, and as always,